Today we're going to be talking about the 4 questions that you can use, 4 simple questions, in order to understand in general what type of funding you qualify for. And that's good if you're seeking financing. It's also good if you're talking to people who are seeking financing. So really it's good for both people. Otherwise you can get lost in a sea of different questions. It's easy when you talk to a customer to spend a lot of time talking about the wrong stuff. Now over the last 10 years and through helping people get over $1 billion in funding, we've learned that with 4 simple foundational questions, you can quickly categorize people. So I'm going to tell you what the questions are real quickly, and then I'm going to go through one at a time and give you a little more detail on the questions. The first one is this, and this is one that I like to start with, is how many years corporate tax returns have you filed for your business? That's the first question. Second one, what are the personal credit scores of all partners with at least 15% equity in the business? Third, what were your reported annual gross revenues and annual net profits? And finally, what collateral or assets do you have? All right, so those are the 4 questions. Now you've heard them. Let me go through each one and describe why we asked them and what you accomplished with them. So the first one, how many years corporate tax returns have you filed? I like to ask this question because it very quickly helps me understand if I'm talking to a business or somebody who wants to start a business, right? Startup, according to the banks, is anyone with less than 2 years of business tax returns. So, we need to understand some people's ideas of a startup and ours can be very different. But based on that answer, you fall into a number of different buckets or you qualify for different types of funding. So if you come in and you say 0 years returns, then there are 3 programs that you can qualify for no matter what. So these programs you can qualify for even if you say 0 years, I haven't started a business, I've never been in business before. And the first one is our credit card program. You could be a startup and qualify for the credit card program. Our retirement rollover. So if you have retirement funds, you can use those to roll over into your business. Darren, if you don't mind going back, you're okay. So credit card program is good for startups. A retirement rollover is great for startups. Or for CRE, you can do a CRE if you've never had any time in business at all. So 0 years, there's 3 programs you qualify for right away. If you have 1 year tax return file, and really you need a year of tax return file, then you qualify for working capital loans and equipment finance in addition to that. And then beyond that, if you file 2 or more years tax returns, then you qualify for just about any type of business funding out there. So that opens up to business term loans, SBA loans. We have alternative lenders that require a couple years tax returns. But again, one of the reasons I really like this question is you don't say, how long have you been in business? Some people, you say, how long have you been in business? They will say, I've been in business for 5 years. But then you find out they have never actually filed a return. They're making money. They're not reporting it. It's not a business as far as the lenders are concerned. The lenders in general care about tax returns filed. They don't care what you say your business revenue is or anything else. They care what is filed on your tax returns. All right, so that is the first question. The second question is, what are the personal credit scores of all partners with over 15% equity? I ask this question because it accomplishes 2 things. One, it tells me how many partners are there. If it's 1 partner, it's easy. The more partners you have, the more risk that you have that you're not going to be able to actually get funding for somebody. But let's say it's just 1 partner to keep it simple. There's about 5 different buckets that you fall into based on your credit rating. So again, let's start at the bottom. Let's say somebody says they have a less than 500 credit score. So we do have programs for people that have less than 500 credit score, but again, it's back to some of the same ones as startups. You could do a retirement rollover, doesn't matter what your credit is because you don't have to qualify for it, you just need money in your retirement account. Or you can get a CRE, which is a real estate loan, using the equity in your house. We've had a number of CRE loans recently. That's people pulling money out of properties they own or getting foreclosure bailouts with under 500 credit score. So that is not a problem for that program. If they're in the 500 and up range, then you know they qualify for working capital loans and factoring, which is very forgiving on credit. If they say it's 550 or better, they can get equipment financing. And of course, the higher you go, it's going to help for all these programs. At 620 and above, you start qualifying for fix and flip financing from real estate lenders. And then last but, the best programs are always at the top. For 700 and above, you can get credit lines and SBA loans. which are the ones where you need the best personal credit to qualify for. All right, so those are the first two questions. The third question is, what were your reported annual gross revenues and annual net profits for the last couple years? And by the way, if they say they didn't file any tax returns, then you could basically just skip this question. It's unnecessary. Or, that's what it is. If they say they haven't filed, but they may have a profit and loss statement for the last year, you could still potentially get them a working capital loan. But it's going to, you already know they're pre-qualified from the other, or precluded from the other programs. All right, so if they come in and say, I have $0 in annual gross revenue, again, you're back to the startup programs. Retirement rollover works, the CRE program works, fix and flip, which is for flipping property works, and the credit card program. All of those you could do with $0 in annual gross revenues. Now, once you hit $120,000 in annual gross revenue, that's about $10,000 a month, now you qualify for working capital loans, factoring, and equipment finance. We pretty frequently get people who try to get a working capital loan and they're only bringing in $5,000 a month. That is too low to qualify for just about any kind of financing that's based on your revenue. Frankly, it's so little that we don't provide much value. We don't really help people at that level unless they have good credit and qualify for other programs. So $0 in annual gross revenue, $120K in annual gross revenue. The third one is based on the differential between your gross revenue and your net profit. If you take your gross revenue, let's say it's $1 million, and your net profit is $100,000, that $100,000, break it into 12 months, that's $8,300 a month. The debt payments for a term loan or SBA need to be no more than, say, 3/4 of that. Technically, it's a 1.25 debt coverage ratio. That means if your monthly payments are $1,000, you need to have $1,250 in net profit reported on your tax return in order to qualify for a loan with that payment. All right, sorry if I'm getting a little bit too far into the weeds, but a very common problem we have is somebody who comes in and says, I want to get a $500,000 SBA loan, and when we look at their last year's tax return, they reported a loss, or they reported $10,000 in net profit for the whole year, which means they could only get a loan for maybe 50 grand. I mean, the net profit just isn't enough to cover loan payments. And again, you may say, hey, I had a bunch of stuff I wrote off that wasn't a business expense. The bank doesn't care. What they care about is on your tax return. All right, fourth and final, and of course all of these lead to subsequent questions, but just as a general bucket, what collateral or assets do you have? And that is going to pre-qualify people to get into, as far if they say I have nothing, I have no collateral, no assets, fine. They can get into the credit card program. They could do fix and flip. They have to have money down for the property, but they don't have to have secondary collateral. They could do working capital loans. So all of those are fine if you have no assets or collateral. 401k, you need to have money in your 401k. Consider that an asset, so you can't get in without it. Non-owner occupied real estate, that's what you need to get into the CRE program, or at least a bunch of money down. Owner-occupied real estate works, or equipment, works as collateral for term loans and for equipment finance. And then last but not least, a program that we love it when we get it. When somebody comes in with, say, 100 grand in stocks and bonds, you can get a super low interest rate loan, like 2.5% interest, using that as collateral. So if you have any one of those assets or collateral, then that's something you qualify for. All right, so I went through the 4 questions pretty quickly. First I skimmed them, and then I went into a little more detail. Now I want to open it up for questions or scenarios. If anybody wants to call in with a specific question, first we'll run you through the 4 questions and see how well the breakdown works. And then we can start digging into a little more of the detail. That way you can hear live exactly what's happening. So if anybody wants to call in, go ahead. I'm going to start looking at the comments other than saying that the screen was black before. First question, or the most recent one here, says, is depreciation added back in to get cash flow? Someone can have little taxable income but a big depreciation write-off, then they have a lot of cash flow. So that is an excellent question. For an SBA loan, I was talking about your monthly net profit being the amount that you have to make your monthly loan payments. That is true. But sometimes on people's tax return, there's depreciation or owner's salary that you can add back in. There are things you can add back in. So it's not always the bottom line number on your tax return. Often it's that line plus a couple of the other lines. And what those lines are really depends on the industry, the type of financing, and now you're starting to get into complicated enough stuff that if you don't do this for a living, you might as well have a professional help you with it. All right, let's see here. Somebody's asking for a flow chart. Well, I would love to provide a flow chart. We should probably put something together. Frank is asking me for me to go through the questions one more time slowly. So let me go ahead and Darren's going to pull that screen up again just so I can say it. How many years corporate tax returns have you filed? What are the personal credit scores of all partners over 15%? What were your reported annual gross revenues and annual net profits? And what collateral or assets do you have? All right, we got somebody calling in. Let's see what we got here. Hello, you are live on Finance Agents Live. Thanks for calling in. Who's talking?
This is Frank Allio. How are you doing?
I'm doing great, Frank. How about you?
I'm doing fantastic.
Awesome. Thanks for calling in. Frank is actually the owner of one of our member offices, and he deals with different funding opportunities all the time. So do you have any scenarios that you want to go over with us, Frank?
Yeah, I have a scenario that was a mind breaker for me, but after listening to the 4 questions and your explanation of them, it sounds like we might be able to solve this lady's problems.
Great.
I'm just going to call her Susan for now.
Okay.
Susan is a real estate investor, and she has a piece of property in the upscale area of Chicago, and her property is worth $250,000. She came originally to me looking for a unsecured business line of credit, and I immediately went through the process to get that for her. But we find out that she's first problem, she's fallen down from over 700 to below 680 on her credit score.
Okay.
Second problem is she's missed a few payments on her credit cards. Third problem, she missed a mortgage payment, and 3 strikes, you're out. And I tried everything else that I could think of to help her, but I couldn't. She only owes $168,000 on a $250,000 piece of property. So I thought that maybe there's just something that we can do, and I was going to call Trey, so this is a perfect timing.
Okay,
to talk
great.
to you.
All right, so let's sort of go through this. So what's she want the money for? She's seeking business financing for what purpose? It sounds like a debt bailout.
It's turned into that, but she's wanting to invest in other properties in her area.
Okay. Is
she wants to get into the buy, fix, and flip business.
Is she current on her properties right now, or?
She has just missed a mortgage payment.
Okay.
This is the first one she's missed in 30 years.
Oh, wow. Well, that's bad. That's unfortunate timing. All right, so going through the questions just so we understand, just so we can put into practice what we're talking about. First one is, how many years corporate tax returns have you filed? I'm guessing, does she have a business, or is her only business the one, does she a W-2
no,
employee?
Buy, fix, and flip is her only business at this point, I believe. So that brought to my attention, what you said, brought to my attention that I need to ask her that. And the other thing I needed to ask her is, it was a very long story. Her husband died over a year ago, and there were other problems, so that's why she's in trouble now.
Okay. An interesting thing, something that comes up a lot is when I talk to clients, or hear people around the office talking to clients, often clients want to get into a long story where they explain their whole situation. The reality is, most of the time, and I know you know this, Frank, and this is for everybody else, is most of that stuff really doesn't help us. Understanding that part of the situation doesn't help. What matters is the answers to these 4 questions, right? If she's not filing corporate returns, then I can't go apply for normal business funding. If her credit score is, if you say she's 680, but she just missed a mortgage payment, I'm thinking it might be lower than that, because if you have recent lates, it drops your score pretty quick. Now, she doesn't have annual reporting for gross or net profits. I mean, unless she's incorporated and she's filing everything. Most fix and flippers, besides like the top ones that are doing 3 or 4 properties a month, they have very inconsistent cash flow, or they may get paid once every 3 or 6 months. So most of the business funding is going to be difficult for her. The credit card or credit line program is going to be impossible if she's under 700, really, to be any amount that she really needs. But we do have fix and flip lenders that can be fairly aggressive if she has money to put down. Now, if her credit gets above 700, we have extremely aggressive fix and flip lenders that'll lend up to 90% of the after repair value in some circumstances. So if she wants to do that, she just needs to, get together some of her personal debt issues, get her scores back up, and we'd be able to help her out. I mean, she might be a good person to get. I don't even know about putting her into. The most important thing is that she's current on her bills, because every time she misses something, it basically disqualifies for other funding. So I guess what it comes down to is I'd really want to know what her score is, because I'm questioning whether or not it's really 680. If it's actually 680, we have fix and flip lenders she can work with. If it's dropped a lot, then it's going to be tough.
Okay, so the fix and flip.
Oh, you know what?
That you talked about earlier.
Suzanne.
Makes perfectly good.
Yeah, sorry. Suzanne made a comment that she may be able to get the mortgage company to delete the one late payment. And that is 100% true. If somebody has really been good for years, typically that first late payment, sometimes the lenders will be willing to remove that. It's 100% of the discretion of the lender, but it's definitely worth asking for. So that's a good option, Suzanne. Thanks for bringing that up.
Okay. Thank you very much for that. The other thing I talked to her about is, again, her husband passed away, and he was in some kind of business. I'm wondering, does she have a stocks and bonds that she could tap into?
Okay, so that's a great question, because that does come up. When we tell people that there's a program where they can get a loan based on the stocks and bonds they owe, this is for public companies, publicly traded securities. And it definitely doesn't qualify for somebody's ownership in their own company, because it's not liquid in any way. And especially if he passed away a year ago, and who knows what's happening with the company now. Unless it's a big publicly traded company, then it's unlikely she could use it for the securities-backed loan. So probably her best bet is, she wants to do fix and flip. There's really aggressive fix and flip lenders. It sounds like that's what she needs to be doing. And maybe her best option is, as long as she's not going to have more late payments, see if she can get that last mortgage late removed. That's probably the best option for her.
Okay, well, I'll get her back on the phone, and I'm going to ask her these questions. And I hope you can get them out in a printed format, because they were great.
For sure. Yeah, we can email it out afterwards. All right, any other scenarios, Frank?
Well, I have many others, but that was the one that I was working on
All right.
most.
Well, that's a good one. We'll wrap that up there. Thanks for coming on, Frank. We appreciate it.
Okay.
All right, bye. All right, anybody else who has a scenario, feel free to call in. I think we had somebody who called in and got transferred while I was on the line, so I wasn't able to answer that. I think we're getting somebody else transferred through now, maybe. In the interim, Ron is asking, is this program for business loan financing only? And no, most of the funding we do is for business funding. We also have real estate related financing, which of course is a type of business. We don't really do personal financing, so in that sense it's all business related, but it does include real estate. All right, I looked like I was getting somebody transferred through, but maybe I'm wrong. All right. Well, if there aren't any other questions, then we'll go ahead and wrap it up for the day. Thanks, everybody, for coming on. I'm not done yet, so don't jump off. I want to tell you about what's coming up next week. Next week, and I see there's some questions coming in, so I'll answer those before you go. But for the next 2 weeks, actually, you guys know who we are. I talked to Frank. He owns one of our member offices. Member office is a very important structure for us. It's the sales offices we work with. We've had 99 sign up over the last couple of years. We got about 7 or 8 people that might be office number 100. Okay, we got another call coming in. 1 second. Hello, you're on Finance Agents Live. Who's calling?
This is Brett Nelson.
Brett, how you doing today?
Doing good. How are you? With Top Funding Source?
Yeah, that's right, man. Awesome. Thanks for coming on. Great. So what scenario do you have for me?
Well, I have a customer. I have a client that has we're trying to do financing. She has 3 businesses. She's potentially going to open up a third, and her FICO is sitting at about 780.
780.
So
right?
we're
That's
trying
good.
to. So we're trying to see what we can get her. There's a lot of scenarios, but I want to see what we can get for her as far as potentially opening up a new retail establishment for her. So
Okay, well, great. Why don't you just a super quick summary on what are her 2 existing businesses?
her 2 existing, she has a boutique and she has kind of a boutique furniture mix store.
Boutique, so clothing and furniture. Did I get that right?
Yes.
Okay, so 2 retail locations. Has she been filing taxes on them does she have at least 2 years tax returns on each one?
Yes.
Okay.
Actually, the one, no. The other business, yes, she has. She probably has, I'd say, 5 years returns on that business.
Yeah, another one of the reasons I start with the tax returns is that I want to know right away if somebody potentially qualifies for a term loan because the rates are the lowest. If I can get somebody into an SBA or a term loan, they normally love it. They want to get 6 or 7% interest. People will sign up for that all day long. So I immediately start with that to try to see the lowest options are available. Now, she wants to open up a 3rd retail location. Is that right?
Correct.
Okay. So do you know how much money she needs for the 3rd retail location?
She's probably looking at. She's trying to cash flow it between the 2 businesses and pulling the monies across. That's what she's done prior. But I would say she's looking at 100 for inventory. She wants to do some collateral growth as well for advertising. So I would say she's going to buy 50 in inventory, and the rest would be as far as preparation forward.
Okay, so the target, as she said to you, is 100K. So that's kind of what we're looking at. What do you know about her existing businesses? Let's take the older one. Do you have any idea? Do you know what the gross revenue and net profit are for say 2016 or 2017?
2016, she was doing around 480 in just that business alone.
Gross revenue.
Correct.
So about 40 grand a month. And do you know what her net profit was?
I do not know. I would say so she's on the 30% at least on that side.
30% net profit filed on her tax. That'd be pretty darn high. That would be great. I don't see that too often, but if it is, that's awesome. Now, sometimes it sounded like her second business is a little younger.
Sure.
I guess the concern is that 2016 was good, but then she lost money or made less in 2017 because she was flowing money into the other company. Do you happen to know if it was a big change in 2017? From
our conversation, she's done really well.
Great.
So the profit's been they're almost complementary businesses, and they aren't far from each other. Same customer, different blend of products. So she's really what happened was she doubled her footprint, and it made sense to do so. And really, just by being a few blocks away, essentially increased her bottom line from between $15,000 and $100,000. So it just made sense to do so as an investment forward. So I think she's looking at doing another location in a neighboring town. So
she's looking to do it again. Well, from what you're telling me, it sounds pretty good. It sounds like she has time in business. She's been filing tax returns. If what you're saying is true, that she has a 30% net profit on her tax returns, then she has plenty of money to cash flow a new loan. If she has good credit, she's checking all the boxes. So that is definitely sufficient to have her apply for a term loan for the new location. A couple different ways to do it. She could just apply for a loan on her oldest business and then potentially use the money for the new business, although you got to be a little careful how you do that because some banks won't allow you to do that, so you want to look at the covenants on that. But we can obviously help with all that process. That's probably going to be the easiest because if she only has 2017 on her newer business, that means she wouldn't have filed a tax return yet because it's just the beginning of 2018. So, but at a minimum, if she has a 780 credit, we could probably get her 50 to 100 grand just in working capital, just in credit cards. But we might be able to get her a full term loan for all of her expenses. We could potentially get her equipment financed in order to partially finance a build out. So there's a lot of options we have with this customer based on the scenario they presented.
So if she, I think, has an existing SBA, can that be rewritten, or can that be just paid off?
She has an existing SBA?
Yeah, from when she launched her first company. I think that rolls over. So how would a customer, or what would you
That's a great
recommend
question.
on that side of it?
That's a great question, and I know that somebody here knows the answer to that, and I'm not positive. Let me just give you a little color on that. Getting multiple SBA loans is complicated, sometimes a little more complicated. If she has one, generally they're not going to refinance the existing SBA.
Right.
I'm pretty sure that's right. So now she'd have to get a new one. As long as she's doing well on the other one, then it'd be like she's financing a startup, which you can get SBA loans for a startup, it's just harder. But again, if all the numbers you're saying were true, then, and maybe she has some extra collateral. So the first SBA loan she had, the SBA would have sucked up all her available collateral. So really the new one's all going to be based on cash flow and net profit. But it is a possibility.
Okay. I was really trying to see if we could just pay off the existing. I know there's I don't think there's much left on it, and I was going to see what we could potentially do for maybe either processing or an unsecured line or personal line. So
that'll take a little extra digging on our part. But get an app, get it in here. Make sure to ask for everything on all the businesses. We need tax returns and bank statements on both of her existing business, anything she has on her new one, so we can give you a complete answer.
Okay. Perfect. Okay.
Okay.
All right.
Great.
Perfect.
Excellent. Thanks for calling in, Brett. We appreciate it.
All right. Thank you.
You bet.
Bye-bye.
Bye. All right. I see a couple other things coming in here. Robert is asking, do you do funding for independent distributor vendor routes, like bread routes, where the corporation for the bread products only require down payment and actually help finance up to 80%? All right. Now, Robert, I don't know the exact scenario you're talking about. We do finance bread routes. I don't know the exact specifics on. I know some of the routes have different, like FedEx routes, for example. It's a little challenging to get financing for them because the FedEx won't allow you to have a UCC on your business because they want to be in first position in case something goes wrong. So the Flowers bread routes we've done financing for those. So it's really going to depend on the amount that they need. But if they have good credit or assets, there are always financing options available. Now, one thing when I say assets, owner-occupied real estate, the house they live in, works for term loans or equipment, but it doesn't work for the CRE program where you just pull money out. That has got to be a rental property or commercial property. All right, so Robert is saying, like, money just for the down payment. Can we help finance the down payment? And definitely. Now, if it's $1 million route, it's going to be hard, but a lot of these routes are only 50, 100, 300 grand, and you may only need 30 or 40,000 to put down. We definitely have options available, especially if the person has good credit. All right, somebody else is asking, where can I find the info on securities-backed loans? I don't see it in the back office. That is generally something we sort of verbally manage when the lead comes in, but I'll tell you a quick overview now. Relatively straightforward. If someone has 100 grand or more in publicly traded stocks and bonds, something they'd have in an investment account, you can have a little bit less on bonds. Stocks, you need at least 100, bonds maybe around 80. You could typically get a loan for anywhere from 60 to 90% of that value, depending on a bunch of scenarios that I won't go into. And the interest rate is extremely low, 2.5% interest. The one, this is not a catch, but the one caveat or criteria of that is that whoever is their broker of record, they need to transfer it into the new entity where they're getting the loan from, because they're going to be able to margin call those securities. They're going to be able to sell the securities if the person gets into trouble. Now, nobody really likes that, but the interest rate at 2.5%, while some people are out there getting 20% interest rate loans, and you still have the risk of paying back the money no matter what, convinces most people, hey, if you got it, use it, because it's the second cheapest funding out there. The number one cheapest funding you can get is a retirement rollover. It's actually the opposite of cheap. It pays you back more money than anything else. So that's the number one. Number two is securities-backed loan. That's the second cheapest thing. SBA loans are number three. And then after that, you got a whole mess of different stuff, and it's not as clean of a list anymore. Okay, Ron is asking, does it include all entities like corps, partnerships, LLCs, tax file? Maybe what you're asking is, can we do financing for all different types of legal entities? Yes. We can even do financing for S corps. For sole proprietorships where you don't have a corporate entity at all. Now, how it applies to all the different types of funding is probably longer than what we want to talk about on the call right now. So I'll just leave it at that. But definitely, any kind of business entity, even a sole proprietorship, even somebody who's just doing fix and flips without a business entity at all, can get financing. All right, so come back next week, actually for the next 2 weeks. You guys know that we have our member office structure where people come in and run a funding business using the same systems and tools that we use to get Inc. 500 3 years in a row, raise over $1 billion in funding, and make a heck of a lot of money. That system is now available for people. If you're curious, you want to learn about it, come back for the next 2 weeks. We're going to do 9 episodes. We're doing daily live streams for the next 2 weeks, Monday through Friday next week, and Tuesday through Friday the next week after that, where we're going to go over the whole structure of what it is and then do deep dives in the 4 primary categories of why people work with us as a member office. Then the following week, we're going to have actual member offices on for interviews so you can hear them talk about what it's like, what they're experienced with, what they've been able to do, and even ask them questions live like we've been doing right now. With that, I'll go ahead and wrap it up for the day. Thanks, everybody, for coming on. Super appreciate everything you do. I really appreciate everybody who made comments and everybody who called in. And I look forward to doing a lot more deals together. If it's the first time on your show, make sure to subscribe. Click the little notification button so you get notifications or alerts. Besides that, we'll go ahead and wrap it up for the day. Thanks, everybody, and we'll talk to you soon.